Oh my God. Nicole
Hey,
is
Ryan.
on the loan meeting.
Hey,
I just wanted to eavesdrop to hear what you guys are thinking, so I'll put myself on mute.
Well, should we give it another minute or so and see if anybody else is joining us?
Sounds good.
Sean, you look like you're in some bunker in some, classified location with Dick Cheney on one side and a pallet of Ham's beer on the other or something.
Yeah, they call that my basement. Gotta hide from the
outside trying to play Paul Bunyan.
Yeah. Gotta hide from the hooligans.
All righty. Well, I think we are, yep, we got this thing recording. So for those who can't make it, hopefully tomorrow morning I can get this thing loaded online. It looks like we've got about a dozen folks here. So I think most regions are represented. So thanks for everybody for getting together so quickly. I know, well, we all have some opportunities from federal EDA for revolving loan funds. I guess we all have a different dollar figure, and whatever that is times 10 or plus 10% for admin. And then we also, most of us wear multiple hats, have some federal EDA planning dollars. I think we're all at that $400,000 mark, if I'm not mistaken. Maybe somebody's getting a little more or less, but at least that's where we are sitting on that one. So I guess we all kind of wanted to get together to chat. Should we talk, anybody have a preference? Should we talk revolving loan fund first?
I'd be in favor of loans first because I'm not working on the other one.
Oh, then let's do the other one first, just to mess with you.
Just for me, Jordan.
Yeah.
I was going to say the same thing, and we've got a couple people here from ARDC who are new to the group. Maybe we could do some quick introductions with everybody. Thanks.
You hit it, Josh.
All right, I'm Josh Bergstedt. I'm a principal planner with ARDC. I traditionally have not worked on the RLF, but some of you may be aware we're bringing that administration in-house into ARDC. Basically, just as this all kicked off, we ended our contract, and so I'm kind of helping to get that set up. And we have with us today, I'll introduce them and let them go, Anthony Landgren, who is a RLF assistant, and then Chad Record, who is our loan officer.
Hi, I'm Chad Record. I was just recently put on as an independent contractor to handle the revolving loan fund in the forms of administration, primarily with the collection of existing loans and then facilitating documentation and loans going forward.
And I'm Anthony Langren. I'm a new hire for ARDC, and I'm just handling a lot of the RLF day-to-day stuff. So
We'll also be working on planning stuff once we get that money as well.
Cool. Welcome to the group.
All right, I'm Lou Vanderwerf. I'm the finance director at Region 9, and I'm also the one who handles the loan funds.
Les Nelson, Mid-Minnesota Development Commission, Wilmer, Minnesota, proudly serving the counties of Candio, High Meeker, Renville, and McLeod. I'm the Economic Development Director, do the SEDS for the Regional Development Commission, and I also manage the revolving loan fund, which is about $1 million right now.
What's this SEDS thing that you speak of?
I love it. I live and breathe the SEDS.
I'm Laura Osley, and I'm the Community Development Planner at the Upper Minnesota Valley Regional Development Commission. So we cover Big Stone, Yellow Medicine, Swift County, Lacoparle, and Chippewa counties. I'm also the loan officer for our revolving loan fund. Previously, we had about 1.7 million within our revolving loan fund, and then now with this new option, that would be doubled with it. So lots of planning going on with that.
Sean Ranum, Northwest Regional Development Commission. I'm the RLF manager and then also an economic development planner for the Northwest 7 counties of Minnesota.
I'm Sister Mary Matthew. I'm the finance director of ARDC. I've been involved as a member of the technical advisory committee of our RLF program the last number of years. Our RLF existing fund is about $3.4 million, and we have the opportunity to put in an application for a substantial increase. So thank you.
I'm Jordan with the East Central Regional Development Commission. We've got about 1/10 of the money as you do up at ARDC. We've got about $350,000. Found out we're eligible for about another $500,000. So I do RLF and federal EDA.
That's great. Thank you.
Hey, good afternoon. Ryan Zemick, Headwaters Regional Development Commission. I'm the Economic Development Director. Yeah, we do the 5 counties here in north central Minnesota.
I am Nicole Brunswick. I'm the Executive Director of Region 9. I'm just jumping in to just listen to the rest of the group. It's helpful to hear what the other offices are doing. So
I think I'm the last one. I'm Sarah Linda at Headwaters up in Bemidji, and 5 counties, like Ryan said, and we have a capital base of 3.1 million, and we'll be able to capitalize up just about that much.
Well, we've all introduced ourselves. I guess I'll tell you what we kind of got kicking and maybe kind of go around the room. So we're starting with our old RLF plan and basically loosening that up as much as we possibly can. Basically no floor on the on the interest rates. Our previous loan range was 10,000 on the low end, 60 on the high end. We upped that to 100,000. Yeah, that's kind of what we did, just loosen her up as much as we can. Not saying the board will have to, we'll do 0% loans, but at least they gives them the flexibility to do that if they want.
At the RDC, we've been kind of, or the UMVRDSC, I should say, we've been having multiple conversations, and I've been talking with a couple of our local lenders along with some of the gap lenders just to get an appetite as to what the funding might look like. I mean, do we have individuals that are going to be looking at that? Similar to Jordan, we're looking at just kind of utilizing our current loan plan and loosening up things again, such as that. We are interested in looking at refinancing options with businesses at this point. I know there were some emails going back and forth about whether or not they were going to do refis or not. We feel that the refinance option is one way to ensure that the funds get out there. And also, but we would want to make sure that we have documentation within each of the files around the ability for the business to be able to, it's that resiliency from following from COVID, or being able to capitalize on some capital purchases or some jobs and things like that. We are also looking at possibly doing the 0% interest for 1 to 2 years, and then year 2 converting that to a 2% or a 3%. We've been going back and forth with our finance department to take a look at what kind of interest we'd be able to capture off that, to determine if it's going to be enough to handle some of the admin costs that come with those loans following the first 2 years that we would get in the in the first allocation of admin funds from EDA. Planning on continuing to utilize our 1% origination fees, another way to capture some additional admin because we are going to be short after those first 2 years at not capturing any interest. We have in our current loan plans that we can do a minimum of $5,000 and a max of $200,000. So we're going to probably stick with those same terms as well too. Looking to prioritize some of those non-essential businesses that have not, not been going at full force at this point in time, but still making those funds available for other eligible borrowers. So we're not going to be like say that these funds are not for anybody. We just want to keep that as broad as we can, again, to ensure that we can get some of the dollars out during these 2 years. So,
Laura, I had a question.
hope I can answer it last.
As far as the management and admin goes on the interest rate change, are you going to balloon on your promissory note, or on your promissory note, are you just going to state that you'll be changing the interest rate and increasing the payments?
Yep. I'm thinking that at this point in time, just the conversations that Matt and I have been having, that it would just be just on the original promissory note. It wouldn't necessarily be a balloon at that point, just because additional admin would be necessary at that point in time if we need to redo all those modifications or updates at year 2.
The other issue you run into with a balloon is if you're getting this money out the door to help them survive, hopefully to thrive eventually, they're not going to be able to pay a balloon in 2 years. They won't be able to, they won't have the means to do that. So I'm not a fan of the balloon. We won't be doing balloons.
Yep.
This is Jordan. Typically what we see with our RLFs historically is, after about 2 to 3 years, they're in good enough shape, the banks take us out. So that's kind of what we always kind of look at.
How do you swing that?
When you drive through our region, if you go through Isanti, there's 3 brand new banks next to each other, all within a mile, and they get bigger the further south you go. So they're greedy as the day is long. They love clamoring over and buying us out as soon as the numbers worked in their favor.
Are they able to compete with your interest rates, Jordan?
With our rates, we only really do gap lending. I mean, it isn't the interest rate. Nobody turns us down because of the rate. Most of our loans come from banks where they can't make it work themselves and they need just a little bit of nudge.
What's everybody taking for collateral?
I mean, we utilize real estate, equipment, it's the same. I don't think we're going to be changing our collateral. I think we actually might be a little more flexible on our collateral requirements with this loan at this point in time. I don't know. What about everybody else?
We'll be more flexible. I don't plan on changing what we accept as collateral. You have to be more flexible because that's the whole purpose of these funds. They're not going to have adequate collateral for what we typically want.
I think we are going to take collateral either at the $15,000 level or the $25,000 level. Otherwise, we'll just hope for cash flow and a personal guarantee. But we are going to take a personal guarantee.
Okay, so you're using a max of requirements. So if it's 15 and under, it'll just be the personal guarantees and cash flow. Okay, yep. That's interesting.
Probably about 3-4 years ago, the RDC kind of tag teamed with Mille Lacs County when they had the Mille Lacs Lake Relief Program. And it kind of stretched out into ARDC land and Region 5 land. And we did the loan closings for a ring around Mille Lacs Lake, probably about 35 of them. And those loans were all, basically the max loan is $100,000. you know, if you qualified, you got the full 100,000 if you wanted it. Are you guys looking at doing that, or kind of individualized, just kind of doing this as an extension of what your loan fund has been before? Every loan's a little different, a little more customized, or are you looking at doing kind of an open cattle call, loans of up to 20,000, 50,000, 100, whatever that number is, kind of a, you know, come one, come all? You know what I'm trying to say?
Hey, Jordan, Greg is in the waiting room. Can you let him in?
Oh, yep. Sorry about that.
No problem.
I think we're gonna be open to anybody like we are at this point in time. You know, we work quite closely with our local SBDC along with the other regional gap lenders when we partner, when we're looking at our loan funds, along with, we have some pretty good relationships with our local lenders. So we'll be willing to look at anything right now, I think.
But aren't going to put it out as, you know, a kind of a template $50,000 loan or whatever that dollar figure is?
No, I don't think so.
Okay.
I think we still want to do the individualized based on whatever the project is.
I think we're going to do that as well. Just wait and see.
Kind of a non-template?
Yeah. I do have one thing that I want to bring up, somewhat related to that, but I don't know what everybody is requiring for loan application submittals. If you're going to get a business plan, an application, and 2 years tax returns, and call it good. And once they have completed all their submittals, then I think I will put them in a queue. They'll actually make the queue, and then we'll move on from there. That's kind of the way I imagine it. We'll see.
Is that just sort of a workflow management type, or is it you're not spending too much time on something that's not quite ready? Or
right. Okay. If they can't get me the whole package, I think I'm going to require a business plan, the loan application, and 2 years of tax returns, and maybe call it good. I don't know, unless somebody else can make some recommendations to me. But that's, I think, what I'm going to go with. And then they'll actually get in the queue, and then I think we're going to charge them an application fee, a small one, just to make sure they got skin in the game, and we don't want to mess with anybody that's not serious. So maybe $50, something like that. Is anybody else going to require submittals of any kind? Or?
Yes, I'm sorry, I was writing notes. You said business plan, 2 years of taxes, and what was the last thing?
A loan application.
Oh, just the loan app. Okay, sorry about that.
I think my loan application will probably include some pretty specific inquiry about the impact on the business so that I can demonstrate the COVID-19 impact to the loan committee.
So you're going to have a narrative, have them put together a page or something?
Yeah, even a paragraph. It doesn't have to be extent. Some people are going to want to talk more than others about everything that's going on, but just to have some demonstration. To me, it seems like it's very much in alignment with your $50 application fee. If they have to put in a little effort of explaining what exactly they need the money for, it's a different kind of skin in the game, but it's not just a blank app to see what they can get.
Are you tying this application to COVID, or are you looking at projects that might have been going on or getting started prior to COVID, and they just happen to be benefactors of this influx of cash?
No. I think that we'll focus on businesses, especially out of this new RLF, we'll focus on businesses that can demonstrate specific impact from the pandemic, and not just the folks that were mandated to close by the government, but also what I call the trickle down effects, right? Trucking companies, think of another one.
How about wedding event planners and
right.
Event I had one that's very mad that she didn't qualify for the state emergency loan. Right. She's directly tied, but she's a vendor, so she didn't qualify.
Right.
we're actually gonna change our application to fit this situation, and we will have a block in there, just like Sarah's talking about with just a brief narrative as far as how you were affected, because we wouldn't be getting this pot of money if it wasn't for COVID. And so they should have some way of saying how they were affected by it.
Yeah, I mean, the money needs to, you know, prepare, prevent, and respond to COVID. But so we've been talking about, and I don't know, just given the amount of money that we have, how much, you know, prioritizing you're going to do. But we've been talking about, you know, prioritizing businesses along, you know, kind of that, you know, shut down because of COVID impacted. But there's also businesses that maybe weren't necessarily impacted by COVID, but if they're a good fit for workers who were displaced by COVID, you know, that's part of that recovery process too, and they should be eligible for it. You know, maybe their terms are a little different, or again, if there's a huge queue, you apply that. But I mean, really, anything that's going to help us get people back to work, and because we've lost businesses permanently, so we need new businesses to come in and get their workers back going.
Some of the local loan programs that kind of spurred up here in the past couple months out of this, we're thinking of stealing one idea from them. We heard a few folks having a question on there if they were current as of March 1st or the end of February, because if they weren't surviving before all this, then we're just financing somebody into bankruptcy. I don't know if anybody else is looking at doing that too.
I helped process a number of those deed loan applications, and that was the requirement. As of March 1st, you have to be current. And deed specifically wrote they did not want the dollars going out to businesses that appeared to be on a downward spiral going into the pandemic. So I think it can be hard to identify. I think some of those factors, they just get increased exponentially when something like this happens. So it can be hard to suss them out. But I think it's important to talk about.
Sarah, what was the date that you used as a cutoff for those applications? March what?
For deed, their application said you have to be current on your debt as of, or all obligations, March 1st, I think it was. Okay. I think it'd be kind of difficult now as you're going into it. If you don't get an application until September, you know, what date might you be looking back at?
Yep.
Be flexible.
Here's another dumb question. Have you been getting a lot of loan applications or inquiries for your traditional existing revolving loan funds? We haven't had a loan app since, I want to say, Thanksgiving, give or take, but we don't have a ton. If we do 4 loans at the RDC a year, that's a banner year for us, kind of thing. We just don't have that big a fund.
I actually have 4 closings that are supposed to happen within the next 3 weeks. So we all of a sudden hit a surge in apps right now. But, you know, that doesn't mean anything either.
Any of those impacted by COVID-19 or?
2 actually. One was a startup, and it's a cafe, a canoe rental and a cafe business right on the river in Granite Falls. So they actually changed their business plan halfway through our application process to meet the new social distancing requirements. So they did a fabulous job in being able to get that through. They were also working with SBDC pretty closely, along with the Initiative Foundation. And then we had a kind of a succession planning, a jewelry store, and the father was selling it to the daughter, and this was taking place during the same thing, the shutdown. So they're just starting up. So, but they're moving forward with everything as well.
And I've got 3 of them that are on hold and just not going to happen now till things straighten out. One is a massage therapist, so everything got shut down before she got to close. Obviously, she's not there. The other one was a business that wanted to buy another property to expand their existing business, but they sell like athletic things and like, you know, the online stores for the high schools to buy their t-shirts and jerseys and all that kind of stuff. Well, now they put that on hold. And then the other one was a guy expanding his business into a bigger building and so forth. And now the guy selling the building decided, till he knows where COVID is, he might hang on to that building for a while and not retire after all. He wants to see how things shake out. So I had the opposite. We've had a long stretch with no applications. Now I finally got them, and now we can't close them because of the situation. So lousy.
I've had a couple general inquiries, but only a couple very light inquiries for people affected by COVID. But it tends to be, as soon as they hear that any program that I can hook them up with isn't necessarily forgivable, they're just waiting. They really don't want to have to deal with debt.
This is Greg, and I know I'm an unfamiliar face to many of you. I'm at West Central Initiative, so we're running the DEED Small Business Emergency Loan Program, and that is my primary focus. So I do have a backlog of a bunch of kind of normal loan applications that have been put back burnered. So we're dealing with these DEED loans, and those are even difficult at 0% interest to get out, because you're saying, there is just not, there's an aversion to debt still, and they don't want to get a loan. But then I get more, at least a couple of inquiries every day of like non-COVID related projects. I think people are just looking for really low interest rates and whatnot. So
Yeah, I can't speak to the loan part of it. I already passed my knowledge on that, but I know that on kind of the development side, a couple of cities we work with, I mean, the projects are still moving ahead. They're still getting applications on different types of commercial and residential developments. So some people are still out there moving. It's just, maybe if this goes on longer, they'll slow that down, but people are still looking to invest.
I'm working with the Northwest Minnesota Foundation on the DEED program, and we could only come up with probably 24 inquiries that didn't qualify for the DEED program that, might fit into this. And, that was a month and a half ago. So I don't know if they're actually still would be like considered hot leads or still in need of the money, or if they were just looking for some cheap dollars, So that was kind of my starting point on gauging some of this, but otherwise regular inquiries, I mean, it's crickets for the most part. So they want to give us a pretty big chunk of money, and I'm kind of like, well, how do I get this stuff out? Because I do see the aversion to debt. I mean, and I'm also worried about being the one to throw them an anchor while they're jumping overboard. So
we'll be able to use our admin dollars to put in more staff, so to build up our staff capacity, which is really going to be great for marketing the program and trying to get out to our bank partners and small businesses in the region, beyond the very small amount that I do, and Ryan does a lot, but I need a body to go out and do all the marketing.
we decided we weren't going to hire somebody. But I can see where that would be really, really helpful.
Well, Ryan can attest to this. If we don't hire somebody, I'm going to lose my mind. So that's
That's what happened to Ryan.
Yeah, I have to hire, because otherwise Sarah goes crazy, and then I don't want to replace Sarah. It wasn't the worst timing for us. We were talking about hiring just as things started to get there, and just looking at our capacity. So obviously with recovery efforts, we're probably looking at least an FTE, and then probably a contract person too.
Mid-Minnesota is going to hire at least one, probably two people.
the East Central RDC, we're kind of kicking around the idea of hiring one, doing some loan, knowing that there won't be enough to keep a full-time person busy. And then with that $400,000 loan, kind of a mixed duties kind of thing.
Laura, you're muted.
The three that just spoke up about adding additional staff, you're going to utilize some of the admin specifically from the RLF, the 10% that you're getting there, along with your the $400,000. Correct? I just want to double check when I'm making my notes.
Potentially, yep.
Okay.
Yeah, we have it the way at least I have my EDA COVID response, the $400,000. I have it written as there'll be sort of an FTE that's sort of a regional recovery coordinator, and that's just what we're calling it. It's going to be duties as assigned. And then there's going to be part of that is going to blend with the 10% admin to add capacity on the lending side of things.
Is anyone considering using some admin dollars to help these borrowers with their legal costs? We've always required our borrowers to pay all of the legal costs before closing, and we've been thinking about it, but I'm just curious if anyone else is considering doing that to help them out.
We aren't. That's kind of we don't charge an application fee. And so they're aware that they'll have to pay the legal costs, and then we charge a 1% origination fee up front to cover some of the admin, I guess you could say.
We kind of set it up so that they pay actual closing costs and then an origination. So this is my existing RLF plan. But then their first, 1, 2, 3, 4 payments go to paying off all the fees. So in essence, we finance it. We don't extend them the extra cash or anything, but their first couple payments are fees and origination, and then the regular amortization schedule from there on out.
Would you be willing to share your loan agreement and the language in that? That sounds interesting.
Yeah, I'll send you a redacted version.
Thanks.
You wouldn't mind sending that out to all, that'd be great, please.
What's that?
That would be wonderful.
Could you send that out to all, please?
Yep. Yeah, I'll just send it to this email.
Cool. Thanks, Sean.
We do something sort of similar. We give them the option prior to closing to decide if they want their closing things taken out of the proceeds of their loan. They have the option to do either or.
Do you have people that take you up on that? We used to do that and nobody took us up on that. Our clients bring their checks to the closing and they write out all the checks on the spot.
It's probably half. I mean, I just throw it out there as an option and they get to make the decision, so.
See on upcoming loan closings, specific to people that have been so greatly affected, they'll take that opportunity rather than our costs are sometimes $2,000, $2,500 when I have to use an attorney to do it, and there's not a lot of people that have that available.
We generally will hold their check for 3-4 days, let one hand wash the other at the bank before we cash for closing costs.
Does anybody have any thoughts on EDA's specification about not using the new COVID RLF dollars for something that a federal award to that borrower should have already covered, as in the PPP or the EIDL loan? I don't really know how to think about that one.
I actually talked to Catherine the day after the phone call, and I clarified with her, and what she said is you need to ask the question, did you receive any federal funds? And if they did, what they were for, And then you have to make sure that the application they are now giving you is not for the same thing. They can't double dip for the same costs, basically.
Do you think that could just be like an additional like
Question
form?
on the application?
And they just check kind of a thing, just to make sure we're doing it, you know?
I'm thinking putting it on the application. Obviously it's not on paper yet, but what I was thinking of doing is putting the questions on the application. And then like PPP, we know what that's for. You don't have to ask them what they're using it for. What they use their other money for, just have them just a short line used for whatever. I'm not going to get into any kind of prove to me what you used it for anything. I don't think we should have to get into that level. I don't think that's our job. So I plan on putting it right on the new application and go from there. I feel like that shows that we put the effort in, we asked the question, but I don't think we should be in the position of being the police. And we don't have the time to dig into it anyway.
Well, the reality is anything they applied for should already have come and gone and been spent out. And most of it was for expenses incurred over the last 3 months. So we're not going to be going live for a couple months anyway, so it really shouldn't be an issue.
No, it really shouldn't, should it?
What's everybody doing for when first payments would be due? Are you offering like deferments, like, or anything after closing, just to give them a little bit more time and before that first debt service is due?
I think we're going to give them 6 months deferment, just ad hoc, or if they want it.
We were thinking of 2 months before the first payment.
We left ours open-ended, at least in our first draft of the RLF plan. Leave it up to the board based on the individual needs.
Oh, so you're not going to have a standard, you're just going to case by case. Okay.
Everything is loosey-goosey and case by case, I think.
I think that's the way you have to do it, because comparing, you know, say it's July 1st and restaurants still aren't able to be open. I think you have to sort of take it case by case. There's no other way.
The only hard part there is without some sort of guidelines that you're operating under, everybody's going to ask you questions and you can't really give them a straight answer until you know what you're looking at. Especially like our bankers and stuff, they're like going to ask about what the program has to offer. But I agree, it'd be nice to be flexible, especially with those that need it.
Do we have any concern about this being discriminatory? Because that's something in the past Catherine's brought up a couple of times, that if you're not doing it consistently and you don't have your plan, then you leave yourself open for somebody coming back and saying you're discriminatory because you gave this person this versus that. Anybody else have any thoughts on that?
I think we've got to be very careful in that area, Lou. You know, there's just too many other federal grants that they're looking at that so closely, and why wouldn't they be looking at it in this case? You know, women-owned businesses and everything like that too. I mean, we can prioritize those, but we've got to document it all very well, even in the RLF program.
Yeah, and I'm just thinking, if you let one guy defer his first payment for 2 months and then the next guy 6, and maybe the next guy needs 9, does that guy you gave 2 months to say, well, why didn't I get 9 months? Yeah, if obviously they have, you know.
And that's
To
why
me,
we're
that
kind of thinking the optional 6 months. They have that option as to how long they'd want to defer that first payment. But the max at this point, we're looking at 6 months.
That's what I was gonna say, is just have the language state up to X number of months, whatever you want, and then leave it open for them.
And we did put in there that we could do an additional moratorium should this thing hit next winter and, you know, got an existing loan in place, if we need to go, you know, interest only or whatever, we got enough elbow room to do that too.
What are your guys' thoughts on long-term program income? You know, past the 2 years, especially for those of us that are going to hire somebody to help fill some of this void. How are we going to maintain that?
And that's why we kind of opted for the 0% right away, get the dollars out the door, in hopes, you know, after year 3, we have a little, you know, we have some cushion to be able to start re-lending again at our normal rates. It's still not going to be a ton. Plus, we would be capturing some interest after year 3 at that point in time to be able to add to our continued admin.
Yeah, if we do hire somebody, we're going to tell them flat out that this is most likely going to be a short-term appointment. And so they know going in. And yeah, we kind of figure on bouncing this thing up to market rate like the other loan fund, you know, in a few years' time, whatever. Things get to the new normal, your buzzword of the day, friends.
Lou, I can, maybe you can relate to this, but I guess MMDC adding 2 staff, that'll help with indirect and stretch out the indirect a little bit further,
Oh, it does. Yes, it does.
from what I understand.
And
You will
Lou and
make
I
sure
like
that-
that.
Are you guys looking at hiring Winkler part-time, Les?
Yeah, maybe. Bring him back.
There were a couple of individuals, I can't remember who they were, but said that your loan boards were meeting either like yesterday or the day before. What was some of the feedback you got from your loan boards as to these funds?
My committee actually met this morning, and they were encouraging. They want me to go for the full amount, which was something that I had been not necessarily convinced of, because it's a lot of money to try to get out in 2 years. And just generally encouraging. I was a little bit in my own head during the meeting. Ryan was there, and he might have picked up on some other nuances, but in general, they also didn't have, as much as I pushed them to try to, I'm sorry, my husband's mowing the lawn and the window's open. I don't know if you can hear this. I tried to push them on establishing now some sort of, you know, the bottom interest rate, or just some general philosophies of how we're going to approach some of these things. And I could not get them to really engage on that level. So I'm going to have to, we'll put in the application, and when we get approved, then I'll write the plan and give it to them to react to. I think it'll be easier for them to have something to respond to.
Our board met like right after we got the initial information that these funds might be coming through. So I had brought it up to them during that meeting just to kind of start chatting about it. But it was kind of the same. They were, you know, very optimistic about the funds coming in, but couldn't really offer me any, you know, any direction as to how they would like to see the funds and that sort of thing. So.
We met our board met this morning, and the only thing that they said, there was a resolution to accept all of the funds, and their only comment was that the technical advisory committee is going to have a subcommittee from the board that they will be on the technical advisory committee, in addition to the other members of the technical advisory committee, which of course involves representatives of all of the previous funders in our last recapitalization, which was in 2011. So that's, but they are very enthusiastic in terms of us getting out the money as fast as we can in the 7 northeast counties of Minnesota.
I'm a little naive on this because we don't have one, but it seems like EDA gave quite a bit more money to RDCs with a tribal organization in it. Do you know, have you made anybody that has a reservation, have you made any outreach to the tribes, or how do you intend on doing that, or do you need to, or?
We have a reservation on within our RDC, and I know they have a meeting scheduled. I think it's next week to talk about some of these options with that. But our RLF funds were not based on anything with our tribal connection per se.
I actually emailed Catherine today because I was a little confused about how the number was come to, and essentially they were doubling the capital base of your existing RLF, but the amount that you received was dependent on your allowable cash percentage. So if you've been under 50%, they give you the whole amount. If you were over 50%, they give you half of that.
This is Jordan. We've got the Mille Lacs Band in our 5 counties, and we talked to some of their folks. They are not, they don't have a planning grant. They had, I guess they talked about it in years past, so they're not tied in anything with federal EDA.
And I'm assuming that Rochester and St. Cloud did not get any kind of funding either. I don't know.
Does St. Cloud have an EDD now?
I don't think they have a district set up. Probably 2-3 years ago, Central Minnesota Jobs and Training was kind of serving as the parent organization. They had a couple staff people in there, but I think they left, the last one left about a year ago. I'm not sure what the current status is.
Okay.
We had a county in our region who was looking to recapitalize their fund. And so I contacted Catherine on their behalf, and according to her, they don't get an invite and they don't get the 100%, but anybody can apply for the competitive and do it at the 80-20. So I'm guessing if there was, you know, a county or a community in the St. Cloud region or the Rochester region, that would be how they would have to access those funds.
And I would imagine they could do that whether they had a federal EDA RLF or they just wanted to start a new one.
Right, because the one who contacted me does not have a federal. They have one that they raise the money in their own county. And that was just funds allocated to them, but they would like to add to it now. And yeah, they're welcome to come. They're welcome to apply in the competitive round.
I'm gonna hop off the call. I just wanted to tell everybody it was nice to see you, and stay strong. Keep up the good work.
Good
Yeah.
luck.
Good
Okay,
luck.
Thank you.
stay safe.
Bye.
So do most people feel they're able to get the money they're receiving out the door? Is that a huge concern?
If we're able to do some refinancing, then I feel like we can.
See, I'm kind of thinking too, but I I don't remember who had it on the email, but so typical refinancing, I'm not in favor of because, and I think somebody else hit it yesterday as well. All you're doing is getting the bank off the hook.
Yep.
I'm not in favor of that either. But I do think that if you have somebody who owes 3 or 4 vendors that they've fallen behind on and maybe charged a lot of inventory or something on a credit card, I would consider that because that will help them recover.
Mm-hmm.
I would not be in favor of refinancing any other type of, it would depend on the debt that
Sarah and I talked about this at our loan committee meeting today. What we actually went in there proposing was not requesting the full $3.5 million because we did have concerns about the ability to lend out that in the time being. And our loan committee basically said, no, we'll get it out the door. We'll help you apply for it all. And, just as far as the refinancing, we talked a little bit about that. And I don't want to say they ruled out any sort of refinancing, but what you discussed about, maybe somebody's been floating inventory on their credit card or something like that over the last couple of months, those sorts of things they indicated they'd be much more willing to consider than just sort of a straight refinance.
See, and that's where I'm leaning, but then was it you, Sarah, who sent out answers from Catherine?
That was me. I sent out the email that Catherine responded to.
She didn't look like she's terribly in favor of it, is she?
To me, that seemed like it was a cash flow justification. So it wasn't a bailout to the bank. It was a reasonable economic justification.
Yep.
Yeah,
and that's how I read it too.
I just think in a situation where it's a vendor or if they've been, like I say, floating inventory on a credit card or something, if that helps them be viable, that's refinancing. That's debt I'd be happy to finance, versus, other bank debt.
Is everybody going to do direct lending without bank involvement?
Yeah.
I will. I'm open to both.
If we can, we will. What our loan committee, the bankers on it, when they said to apply for all of it, that was what they said our strategy should be, is just take a piece of things here and there, everything we can do, and get the money out that way. But if somebody came to us with the right project, I think we'd just do direct lending.
That was my thought too. I'd probably contact their banker and see if they want a piece of it, just out of courtesy. But if they need us to go it alone, I was kind of entertaining that idea.
Yeah, we'll do direct lending too, and we've kind of been shifting over the last few years to buying loan participations if we can. If that makes the deal better, partnering with the foundations or the entrepreneur fund or any of those kind of things too. We work smarter, not harder, they say.
So much easier.
Any other thoughts or comments or questions or anything we want to chew over on RLF stuff?
I have to jump off, but thank you guys so much. I really appreciate chatting about this.
Before you split, do we want to get back together tomorrow, early next week, and talk about that, what I'm calling the $400,000 grant?
Yeah, we're missing a couple economic development planners here today, so I'd volunteer to organize that Zoom meeting for tomorrow, or like you said, early next week.
Early next week, please.
Yeah, early next week works better for our office too.
All right, Monday morning at 10 a.m.
I don't think so.
Live from a fishing boat near you?
If you do it on Monday, I'll probably be in the boat, but I don't have any Wi-Fi there.
All right, I'll send out some times for Tuesday or Wednesday.
Awesome. Thanks, Josh.
Thanks, Josh.
Bye,
Thanks,
guys.
Jordan.
Have a great day.
Thanks, Jordan, for setting it up.
Happy to do it. I'll try to get a video of this thing out probably tomorrow morning, and we'll zip that out to everybody on email. So
perfect. Thank you.
Thank you. Have a good one. Bye-bye.
Did you say you?
Yeah.
What's that?
Josh?
Oh, I'm sorry. My screen changed. Did you
What's up?
say you had sent out those questions?
I had sent out the questions that I had gotten back, a reply back from Catherine. I think I just did a reply all, but I can send it back to you as well, Josh. Do you have a copy of it?
Yeah, because I don't think I saw that. So.
Okay, yep, I'll do that right now.
Okay, thank you.
Yep.
See you later, guys.
Hi.
Have a good weekend, everybody.
Yes, have one. Good to see you all again.
Thanks very much.